It's Friday, September the 18th. Welcome to Business Morning. I'm Chimeze Obi Iwagu. We kick off on the global oil market space as prices rose for a fourth straight day on Friday morning as Goldman Sachs estimated the market is in deficit and a new storm started building in the Gulf of Mexico, putting crude on track for a weekly gain of about 10%. Brent crude was up 27 cents at $43.57 a barrel, while the U.S. oil futures gained 23 cents to $41.20 a barrel. Both contracts dipped at the start of the day but have risen sharply this week after Hurricane Sally cut U.S. production and OPEC and its allies laid out steps to address market weakness. Goldman Sachs said in a new report that recent storage on oil tankers of crude for future delivery was driven by transient inventory allocation dynamics rather than a rise in global stocks that would suggest the market is oversupplied. The investment bank predicted the market would be in a deficit of 3 million barrels per day by the fourth quarter and reiterated its target for Brent to reach $49 by the end of the year and $65 by the third quarter of next year. Meanwhile, a tropical depression formed in the western part of the Gulf of Mexico and could become a hurricane in the next few days, potentially threatening more U.S. oil facilities. The Saudi Arabian energy minister also fired a shot at traders, warning them not to bet against the oil market and pledging those who gamble on oil prices will be hurt like hell. Prince Abdulaziz bin Salman, OPEC's most influential minister, made the comments after a virtual meeting of a key panel of OPEC and allies led by Russia, the Organization of Petroleum Exporting Countries and other producers making up the so-called OPEC Plus group are cutting 7.7 million barrels per day of output to support prices. OPEC Plus said on Thursday the group will take action on members that are not complying with deep output cuts to support the market following a coronavirus-led slump in fuel demand. And back here, since the advent of COVID-19 pandemic, the central bank has been coming up with different initiatives to support economic recovery in response to the COVID-19 pandemic. The latest of such initiatives are the unveiling of a 200 billion naira loan for the federal government's social housing program as part of the Economic Sustainability Plan 2020. There's also the introduction of a solar intervention fund that will offer obligors access to credit facility that will not exceed a maximum of 500 million naira with the aim of providing affordable electricity to rural dwellers. Well, to tell us more about these initiatives and others is the Director, Development Finance Department of the Central Bank, Yusuf Yila. Thank you very much, Mr. Yila, for joining us on the program.
Thank you, Chimeze, for having me this morning.
Now, let me begin by asking, we've seen Central Bank doing so much, coming up with different initiatives. This time we have social housing program and rural electrification through solar system. One would ask, are these within the mandate of the bank? What then is the role of the Ministry of Finance?
Thank you, Chimeze. If you read the CBN Act, Section 31 allows us to embark on development finance activities. And these activities we carry out are within the remit of the Act. And they're not really in isolation. We're working complementary with the fiscal authorities. The guidelines that you recently just mentioned, we've been working as part of the Economic Sustainability Committee. So the CBN is not just doing it on its own. It's working with the Federal Ministry of Finance, and it's within the ambit of the Act setting up the central bank, which is around development finance. If you go through Section 31, like I mentioned, of the Act.
Now, let's look at the social housing initiative. 200 billion naira is being put into this project. Can you give us a sense of how this will be implemented and what's driving it?
Okay. You mentioned initially the Family Home Fund was set up by the federal government, shareholders being the Federal Ministry of Finance and the national, the NSIA. What's going to happen is we've found out that construction does, provide a lot of jobs to our teeming youths, and we're going to be funding the family homes with 200 billion to provide 300,000 low housing schemes. What will happen is that these housing schemes are going to be built with, youths that can, do very easy work, things like tiling, things like, roofing. Most of 90 or 95% of the materials are going to be sourced locally, so that will drive some of the construction industry activities. And this money will be disbursed to them in tranches. State governments are going to provide land. What developers typically need to do is approach the family home funds, show them the plans, look at the areas where the houses are going to be built, and then come to the family home funds and CBN and apply for these funds. These funds are going to be disbursed at single-digit interest rates to the family home funds, and then these houses will be built. And the target is to get a minimum of 100,000 of these houses every single year.
Now, the initiative, as you did mention, is to be implemented only by Family Homes Fund Limited. Why? Just wondering, why just Family Homes Fund? What happens to the Federal Mortgage Bank?
Okay, yeah. So this is the initial construction of the houses. The Federal Mortgage Bank is going to play a role later on, because these houses, when fully built, are going to be sold to our citizens. So citizens can approach the Federal Mortgage Bank for loans after these houses have been packaged, and then the Federal Mortgage Banks can offer them mortgages to be able to acquire these houses. So the Federal Mortgage Bank is going to play a role later on, but the houses have to be built initially, and then people will buy them.
Now, we've had several mass housing projects in the past, both in the federal and state levels. What makes this different?
What makes this different is that we are going to be, there's going to be better monitoring, M&E, there's going to be better monitoring. We're working with all the various, the state governments who own land and who are very important. Previously, I think the state governments were taken out of the equation, so the state governments are going to be part of it. Family home funds are the ones going to be disbursing the funds. So it's a whole ecosystem. Every player has been spoken to. They've been part of the development of the guidelines, and we've carried them along. And we are working with the family home funds that this time it's going to be successful. So with better monitoring, better engagement of the stakeholders, all relevant stakeholders, this time we're hopeful that this is going to be different.
Now, from the explanation you have given so far, this money is to help in building new homes. Now, you know that the management of urban growth has been a major concern to governments, especially in developing economies. In Nigeria, for instance, urban migration has seen a lot of growth of slums, particularly in cities like Lagos. If you say you are embarking on social housing initiative, how does this initiative cater for the slum areas? It's not everybody that has the wherewithal to build house from the scratch or to get a mortgage loan with considering the high interest rate. Does this initiative take care of houses that just need perhaps a little innovation to make it habitable?
So you've hit the nail on the right word, which is innovation. And part of the discussion we've been having with both the fiscal authorities and other private sector players is that we must build houses that are affordable. Materials are going to be secured, like I said, locally. An average two-bedroom house, typically will be built for around between 1.5 and 2 million naira. We're looking at very long-term mortgages that are going to be offered. So the category of people that you're talking about who presently are in slums will be able to afford these houses. And we're not really only looking at the urban areas. We're looking at there are certain rural areas that require housing. I mean, the deficit of housing, over 22 million in the country, is not just the urban areas. We're looking at geographically spreading these houses, working with the Family Home Fund around the country. So it's not just the urban areas that these houses will be built. There are certain key areas in close to the rural areas that have good land, have access to infrastructure that will also ensure that houses are built there also.
Now, Mr. Yila, the clarification I need to get from you right now has to do with categories of people that probably, they really don't want to build any house from the scratch, because it's not everybody can just want to build a house from the scratch. Perhaps you just need a little fund to renovate your house. How does this scheme cater for such people? Because we are talking about social housing here.
Yes, yeah. Like I earlier mentioned, its houses are going to be built from scratch. They're going to be affordable. So even if you have somebody who already has embarked on a house that he cannot complete, I believe that's what you're referring to. This is another opportunity for him to be able to, get one of these houses. Like I said, they're going to come very cheap. They're going to be, we'll use local materials for them. There's going to be some innovation around how the houses, Family Home Funds is doing all that. We've seen some of the samples that, they want to build. They've already done some as pilots. And then they can easily, key into the mortgages that will be formed, and then they can acquire the houses.
When you talk about the fact that they are going to come very cheap, how cheap?
Yeah, like I mentioned, I mean, we're looking at a strike rate of, almost around 2 million naira for between a two bedroom house. Yeah, like I said, most of the materials are going to be sourced locally. We're going to ensure working with the Family Homes Funds and the fiscal authorities to ensure that the manufacturers of things locally, like tiles, like roofing sheets, are patronized, so that entire value chain is complete. When you start look at imports, that's when you now start looking at the prices are going up. But we're going to work with them. We've already seen like I said, the pilots and some of the documentation they've shown us, and they're looking at the prices are looking good.
Okay, now I'm taking this conversation from the fact that we are calling it social housing. I actually had this conversation with an expert yesterday who insisted that really it's not social housing because he doesn't see this catering for these, individuals under there who probably need a home somewhere. I did mention, the slum. When you talk about 2 million, you know what people's purchasing power is at the moment. You know what the interest rate is going at. So how then do we describe this initiative as social housing?
Okay, like I said earlier, why it's described as social housing is because state governments provide on the land, they own the land, they provide the land, so a certain element of the cost is taken off. I agree, like you said, 2 million, I mean, the strike rate for quite a lot of people cannot afford it. But the central bank is not in the business of providing grants. We do loans, and all these monies must be recovered. What we've done is the models that we've built working with the Family Home Funds is to, as much as possible, look at how we can ameliorate the situation of low-income workers and a lot of all these people who do not have houses. So that's why we've kept the interest rate as single digit and as low as possible. And working with the Family Home Funds, we've increased the tenure of the facility. So it's a longer period to be able to pay back.
All right, let's leave the issue of this housing for now. Let's talk about your solar connection facility initiative. Tell us about it.
Okay, so the fiscal, as part of the Economic Sustainability Committee, the Fiscal Authority is going to be bringing 5 million solar connections, 5 million homes, connected by solar, especially in the rural areas. There's been a pilot with an NDPHC, and it's really worked. And quite a lot of people have paid back. I think it's only Plateau and some areas of Borno State, because of the insurgency, that they've not paid back. So the central bank is going to be providing funds, 160 billion, to both upstream participants. So those are people who manufacture things like solar panels and other associated equipment. They can take up to a maximum of 10 billion at single-digit interest rate through any of the deposit money banks to either install new lines because there will be increased demand, or work on the existing lines. There's also the downstream part. So you have retailers, installers. They will have to approach the National Microfinance Bank to take the facility up to a maximum of 500 million to either acquire these systems from the manufacturers and go and retail them, or put in place payment systems that people who have acquired these systems can pay back. The choice of the National Microfinance Bank is because for SMEs, businesses, that bank is focused at trying to help SMEs. So they speak their language, they have easy access. As of today, I believe they have over 60, 70 branches they're going to scale up to about 774. So people in the rural areas can easily access any of the post offices where they have their branches. So you have both the upstream participants taking care of and the downstream participants also taking care of. So the target that the fiscal authorities have set is to do 5 million connections over 3 years. And CBN is going to be providing funding at single-digit interest rates. I mentioned 160 billion through either the deposit money banks or for the downstream participants through the National Microfinance Bank to access and ensure that these solar connections are made.
All right. Now, looking at these initiatives that you have mentioned, both the solar connection initiative and, of course, the housing initiative, you intend to have manufacturers source their materials, inward here. But were you able to do some kind of feasibility studies to understand if these manufacturers have the capacity, to actually get those materials here? Because a lot of building materials are imported, even when you talk about your solar.
Yes, so they have a roadmap. I mean, their plans. And NASENI, one of the government agencies, has proven that indeed, most of the materials can be sourced locally. And like I said earlier, just like the housing where there's been a pilot, NASENI has been involved in building these solar panels. So indeed, there's capacity. Might not be 100%, but gradually, I believe they will get there. There's also a solar plant in Borno State and some other parts of the country. So indeed, it might not be 100% initially, but at least quite a significant amount of the materials are sourced locally. For solar panels, the basic material is sand, and we have that in abundance. So it's a gradual process, and then over 3 years, those connections will be made.
Well, you talked about a single-digit interest rate, and I got someone asking a question here. When you talk about single-digit, what is the amount? Is it 9%? Is it 8%? But I'm sure you're talking about 9% here. And of course, how long, would the payment be made?
Okay. So the single-digit interest rate today, because of COVID, we've come down from 9% on our intervention facilities to 5%. So for the first year, it will be at 5% until March 1st, 2021, and then it will revert to 9%. We've tried as much as possible to make sure that the tenure of the loan is extended. So we're looking at between 7 and 10 years for both for especially the manufacturers of the panels and other associated equipment.
Well, Mr. Yila, when is this initiative expected to take off? What is the timeline for the takeoff of this initiative? Is it immediately? And what are the sustainability plans in place for the long-term project?
Thank you, Chimeze. We rolled out the guidelines this week. They're available on the Central Bank website. We've used the other channels that we use to communicate. So the guidelines are already running, and we've started receiving applications through the various channels, the deposit money banks and NISA. There are also inquiries on how manufacturers, retailers can participate. Some are seeking for clarifications, and we've been providing those. So it's already kicked off. It's part of the Fiscal Authority 2.3 trillion sustainability plan. So we're working assiduously to ensure that the terms of the broader plan, this is just a subset, they're all met.
Now, can you, let's leave this other initiative, can you update us on the 100 billion naira and 1 trillion naira targeted facilities for manufacturers? Some of them still have issues accessing these funds.
Okay, I'll be surprised, Chimeze, if you say about access. So I'll start with the 50 billion, the targeted credit, which Governor Emefiele has increased to 100 billion. As of today, we've disbursed 73 billion to over 140,000 SMEs and households. We still have 27 odd billion to go. Applications are being processed as we speak. So pretty much 73 out of 100 billion, 140,000 people have benefited, mostly households. You will begin to see from next week success stories, people who have benefited, who have received this money, who've lost their jobs, and the impact of what this funding has done to them, both businesses and households. So that is for the TCF. Has moved from 50, which we initially set aside, to 100 billion. And across the entire country, yes, there are various, like the Southeast and the Northeast have not, maybe due to access, but we're looking at how we can address that. But across the country, a lot of our citizens have benefited. On the healthcare, which is 100 billion, as we speak today, we've disbursed 44 billion to over 40 projects. And I can reel out some of the names. We've increased lines in certain pharmaceutical companies like Fitsin. Some homes, some hospitals have benefited from the facility. Also, we've even provided funding to a funeral home in Lagos. So a lot of them have increased their lines. Some construction work is ongoing. Your previous question about how we can sustain this thing, we're doing aggressive monitoring and evaluation, working with the deposit money banks to ensure that indeed these funds that have been, the facilities that have been provided are used for the purposes that they've been given for. So there's increased monitoring and evaluation. As we speak, a lot of our staff are in the field and in the deposit money banks, monitoring what is going on. So that's for the healthcare. For the manufacturing, we've disbursed over 350 billion. Just last week, for the Lagos Railway, we did 93 billion. So quite a lot of activity. Jobs have been, hitherto jobs that would have been lost because of the COVID. The funding that we've been able to give a lot of the manufacturing concerns, because they employ quite a lot of people, textiles, those in the free trade zone area. They've kept these people working. So quite a lot has been done as part of the Monetary Authority stimulus plan for the COVID. Then lastly, I also want to talk about the research and development, the healthcare research and development grant. So the applications are being received. There's been a lot of inquiries around that. That is a grant. That is the only grant that we're doing as part of the stimulus. And then disbursements should start in the month of October. So the body of experts chaired by the DG NAFTAC is presently looking at the applications. For me, the most exciting thing for the healthcare, we've received applications in excess of 63 billion. But the good thing to note is that 90% of those applications are coming from our universities. So that's quite exciting, and we look forward, to disbursing these grants so that, not only for COVID, but other illnesses and herbal treatments that we can domesticate in Nigeria, we should be able to do some research and then, fund those manufacturing the pharmaceuticals that will produce them.
Now, Mr. Yila, just before I let you go, I need a quick comment from you. I know you would say this perhaps is not your purview, but at least you work with the Central Bank. What is this new self-certification forms initiative that's making the round all about?
I don't have any information on that. I think you need to speak to the relevant, maybe that will be for our corporate affairs director. I have absolutely no comments on that.
All right. Well, I guess we'll have to get in touch with your corporate affairs department to actually find out what this initiative is all about, because it's creating a lot of confusion out there. Thank you very much for your time, Mr. Yusuf Yila, the Director of Development Finance Department of the Central Bank.
Thank you, Chimeze. I also have expected that you talk about the National Gas Expansion Plan. For me, I used to work in oil and gas in my previous roles. That is very, very important. That's 250 billion. We're looking at how we can, convert a lot of vehicles in Nigeria, hitherto that use fuel, to CNG. Also provide LPG to our citizens. A lot of them use firewood and other means for cooking. So that's 250 billion. It's part of the economic sustainability plan. And also there's the Food for Jobs, which we've been working with the fiscal authorities, Ministry of Agri. As we speak, we've disbursed over 10 billion to about 3 private sector players, Afex, Babangona, Thrive Agric. They have over 80,000 farmers. that are going to be farming maize. They've planted, they've applied fertilizer. So we're looking at a bumper harvest. Luckily, those farms are in the north central area, mostly in Kaduna, so they're not affected by the flood. But what we've done in response to the flood is to try and see how we can do a large-scale dry season farming. The governor of the central bank has said that, look, we need to be able to provide funding for that. And we're already working with all the players, the Ministry of Agric and the banks also, to see how we can fund some private sector players to do the biggest dry season ever in the history of this country this year. So that will address and negate the flood issues that we've had in the Northwest.
And
just wanted to comment on that.
Yeah,
this initiative
that, well, we've seen this initiative that you just mentioned, talking about agriculture, we've seen that food inflation really has been on the rise. How will this actually help to taper food inflation?
Okay, I mean, inflation, you know, is a lagging indicator. Food prices are beginning to come down. I mean, it's a big basket of our composition that we track. But food prices, as we speak, are beginning to trend downwards. Maize, rice. But this dry season farming significantly will take prices down south. So that's why we're embarking on, I mean, for rice alone, we're looking at 1 million hectares. And if you compare the yield, that's 5 million metric tons of paddy that will come out. Same thing for maize and wheat that we are going to be doing in pilot state. So that will significantly bring prices down. We're working with the Ministry of Agric. We're looking at how we can begin to, you know, put in place almost a 2-3 season farming in Nigeria. We have some river basins. We have land along the banks of the River Niger that we can use. Niger State has huge contiguous land that we can bring in private sector players to come and farm. So the focus has always been on the wet season, but we want to see how we can do large-scale agricultural activities in the dry season, fund the big private sector players so that there's increased output, and we can either store that or that will ensure that prices are moderated.
All right, thank you very much, Yusuf Yila. Let's leave this conversation here. Director, Development Finance Department of the Central Bank, Yusuf Yila. Thank you for your time.
Thank you very much.
Earlier in the week, the Securities and Exchange Commission announced plans to commence the regulation of virtual and crypto assets transactions of foreign and domestic issuers in the country. The SEC, in a statement, directs individuals and corporates to commence the registration of virtual activities, including digital asset offerings, initial coin offerings, security tokens, and other blockchain-based offers. Now, classifying crypto tokens and crypto coin investments as securities transactions, the regulator directs sponsors and issuers to immediately commence registration within 3-month period. Joining us now to share his perspective on this development is the head of portfolio management at Commercial Partners, Victor Aluyi. Good morning, Victor. Thank you for joining us.
Morning, Chimezie. Thanks for having me.
So how is this regulation being perceived across the capital market community?
Well, so, I mean, just a bit of a background, you know, because obviously cryptos have been in the ascendancy over the last 2 years, thereabout. Sometime in 2017, the CN issued a circular essentially banning all forms of digital currency transactions in the country. However, in 2019, under the FinTech Roadmap for Nigerian Capital Markets, the committee highlighted the fact that you know, the SEC needed to decide, you know, its preferred classification for crypto and other digital currencies, and also create, you know, a framework for the regulation of all virtual asset exchanges. In 2019 as well, the Commonwealth also published a, you know, regulatory guidance for virtual currencies as well. So this has been in the works for some time now. A lot of things have led up to, you know, the point where we are. Just also for some context, according to a recent report released by, you know, blockchain.com, Nigeria has the fastest growing cryptocurrency markets in the world. Also in Africa, Nigeria has by far the highest volume of transactions. Just in Q2 alone, we had about $34.4 million in transactions. If you compare that to South Africa, which came in second at about 15 million, it tells you that, you know, there's a lot that is going on here in Nigeria, particularly in regards to cryptocurrency. So certainly what the SEC has done with that statement is to clearly show its intention to, regulate that space. According to Section 13 of the Investment and Securities Act of 2007, it essentially empowers the SEC as the apex regulatory body for capital market activity in Nigeria. So the apex regulatory agency, the SEC, its angle here would basically be around investor protection and transparency in the market. So clearly, this is a welcome development. This is an initiative that would also further deepen, the capital market by increasing, if you will, the amount of offerings of securities which clients can have exposure within that space. So it is a welcome development.
Now, several times the CBN had warned that cryptocurrencies are not legal tender and that investors are unprotected. Any idea as what has changed?
Well, the truth of the matter is that the regulatory bodies have essentially paid attention. I mean, like I said earlier, Nigeria is the fastest growing market for transactions globally. That is quite instructive. I mean, Africa, we are, the biggest by far. These are very, instructive, indications that the regulatory agencies have to pay attention to. So, and that's the reason we're seeing this sort of framework being released to ensure that some form of regulation is created within that space. Because the fact that you don't quite understand how something works doesn't mean that you just completely throw it out. So I think it's a right move for the SEC to do this. I think there will certainly be a lot of stakeholder engagement to create even more transparency within the market and essentially make the framework even more encompassing. That would essentially enhance the trading, investment, if you will, in this, sort of like new asset class, if you will.
See the CBN also adopting same approach as the SEC.
Sorry, I didn't get that.
Do you see the CBN adopting same approach as the SEC?
I mean, I believe so. The SEC is the apex regulatory body for the capital market. The CBN is essentially the apex regulatory body for, financial services in Nigeria, which, obviously all of these activities fall under. So I think that we will begin to see, maybe statements from the apex bank. I also think that they are probably most likely working on some sort of framework that would enable this to be subsumed within the banking system. Because, of course, if the SEC is beginning to regulate trading activities in that area, these are transactions that will certainly have to go through the banking system. So clearly, I believe that the Apex Bank would also be having some sort of framework in the works to ensure that these efforts or initiatives are properly harmonized.
All right. Thank you very much for your time, Victor. Victor Aluyi is the head of portfolio management at Commercio Partners. And for review of Thursday's equities trading and, of course, outlook for today and next week, we have Temple here.
Oh, yes, Chimeze, you talked about cryptocurrencies. That's an asset for folks of my age group. And, of course, I don't know about your age group, Chimeze. But then again, let's now talk about the equities that we inherited from our forefathers. Of course, this was a decline of 0.07% yesterday in the market, representing some 9.2 billion naira, or wiped off or shaved off the equity capitalization of the stock exchange. We, of course, know that the year-to-date performance of the market was just has now moderated to 4.9% in this market. Of course, volume of transaction was also positive yesterday. We got a 9% gain in the volume of transaction in spite of a 13% decline in the value of transactions. And of course, for the second consecutive day now, we're seeing FCMB putting some 30-something million units of shares, 33 million yesterday, exchange hands. And of course, that was the largest in the market yesterday only. The day before, they had done some 30 million units of shares. Access Bank contributed also some units to these, and Zenith Bank contributed some 25 million units to that eventually. Banking stocks yesterday were in decline. Talk about the fact that, yes, Zenith Bank got its ex-dividend dates a day after the qualification date, which was yesterday. So we saw some sell down on this particular company, and that also accounted for the weight that depreciated the banking stocks yesterday. Over 25 million units of Zenith Bank stocks were traded down yesterday in the market. It declined by some 1.8%, coupled with the fact that we saw GT Bank, of course, also doing some 2 basis points appreciation. But if you look at the weight of Zenith Bank compared to GT Bank, that pressured this segment of the market. And of course, ETI, which is down, and a couple of other sectors or counters that we have been seeing some sort of profits taken in recent time. Consumer goods positive, industrial goods positive, insurance thanks to Royal Exchange, and of course, a couple of other companies. But we know that something is currently lacking in the markets. It is typical of the third quarter of the year, and that is a catalyst. But let's look at what other counters on the market looks like. Oil and gas was a bit down yesterday, 0.19%. Of course, that's due to profits taken on the counter of O&O PLC, which is 2.13% down. It had actually gained the day before, so it was time for someone to shave off that profit and pockets in their accounts. Other sectors other counters that we have under the energy stocks saw no movement, including Capital Oil, RAK Unity, and of course the major names. The day before we had seen Adova moved the day before yesterday. Of course, that remained unchanged. 11 naira 40 kobo, perhaps that's not so much of profit for someone to take in the market. We know that in recent time, of course, the market has actually been lacking in terms of catalysts, but we know that there's a bit of bullish sentiment in the market, and that's due to the banking stocks that where we've been seeing some key activities. Again, they have declared, the tier 1 names that have declared interim dividends. These are the dividends that got a lot of, brought about some activities in the markets in recent time. But we do know that with the reopening of the economy, there should be some sort of interest and renewed interest, bargain hunting across some counters in the market, as we're beginning to see on some of the major companies that are actually really haven't moved in recent times, like International Breweries, which gained some 21 or lost some 21% in the last trading session, the last 5 trading session, but was able to regain all of these, some of these rather, yesterday when it moved up by 10%. Chimeze.
Well, Tempo, you've actually indirectly told me that you not only play in the stock market, you also play in the cryptocurrency market. I got you there.
That's not confirmed yet, Chimeze.
All right, we'll do a quick break, and when we come back, we'll do an opening call to London, as well as come back to you, Tempo, for the debt and currency market. And for updates from the streets of London, we have Juliana there. Good morning, Juliana. Well, it's the morning after the Bank of England held its interest rate at 0.1%, and of course warned that the rising rate of coronavirus infections and a lack of clarity over the UK's future trade relationship with the EU could threaten the economic recovery. Is this still determining market directions today?
Kind of, Chimeze. It's a pretty dull start to the end of what's been quite a busy week here in the UK. The FTSE 100 opened 0.5% lower. The FTSE 250, the domestic market, is relatively flat this morning. Yesterday, as you said, the Bank of England's Monetary Policy Committee didn't create any monetary stimulus. Quantitative easing remains at £745 billion, and the interest rates are at the historic low of 0.1%. The minutes that were shared after the meeting did show that the bank are really taking seriously the possibility of negative interest rates. So that's kind of put the spook into investors here in London. But COVID is dominating sentiment, surely. Yesterday, a further 10 million people in the northeast of England were put into a local lockdown. We are seeing these local lockdowns rapidly increase up and down the length and breadth of Britain, and there are further suggestions, which I did mention yesterday, that the whole of the country will go into lockdown imminently. This morning, it was confirmed that Prime Minister Boris Johnson's closest medical allies met with him late on Wednesday evening in Downing Street, and there are suggestions that a 2-week lockdown will be imposed soon. Matt Hancock, the Health Secretary, was speaking to reporters this morning, and when pushed on the suggestion of a lockdown, he didn't deny the rumours. So I think that's where we're going, and that's why the FTSE was lower this morning.
And the Financial Reporting Council has fined audit firm Deloitte a record £15 million and been severely reprimanded for failing in its audits of the software company Autonomy between January 2009 and June 2011. How much do we know about this story?
Yeah, well, I spoke about this story with Bissy yesterday afternoon. Deloitte have been handed this record fine. As you said, this is a long-running dispute that's been going on for over 10 years, and they received this £15 million fine because the FDR said they were surprised that Deloitte tried to refute the allegations. Two senior reporters at previous senior partners at Deloitte were accused of basically being too intimate with Autonomy when they were supposed to be conducting independent forensic analysis of their accounts. Supposedly, they beefed up the numbers and made it look like it was much more healthier than it was when they completed a sale to Hewlett-Packard, and Hewlett-Packard had to downgrade all of Autonomy's accounting. So, yes, they were given this £15 million fine yesterday, and this is, again, the biggest that any of the four big accounting firms in the UK have received.
And John Lewis is in the news again today. This time, the retailer plans to scrap staff bonus and cut value of stores by £47 million. What soundbite are you getting concerning this new move by John Lewis?
Well, yes, it's a half-year season reporting, and yesterday John Lewis did report their half-year sales, and their sales were down 635 million pre-tax, which is a massive loss, and it's something that, of course, we've seen up and down the high street. John Lewis yesterday as well, we were discussing the fact that they have asked for support from Westminster Council to go ahead and transform 3 of their floors on their flagship Oxford Street store into office space. And that's really because, of course, the entire landscape of consumerism is changing. Lots of people are moving online. Before even the coronavirus pandemic took hold, John Lewis were already struggling. But this is the first time since 1953 that they haven't paid out their staff bonuses. John Lewis is a partnership, so once you join the company, you have an option of taking on shares. And it's that dividend that and bonus that staff were to be receiving, but they haven't received that. Waitrose is doing pretty well. Waitrose is the grocer that sits underneath the John Lewis brand. Their weekly food orders have jumped from 60,000 pre-lockdown to 170,000 orders per week post-lockdown. But of course, that's not enough to mitigate against the losses that John Lewis have. But they're still feeling pretty confident. Christmas is always a good time for John Lewis, so they're hoping that they'll be able to get enough footfall in the store to stop them from closing down any more stores or reducing the number of people they've hired.
Hopefully they'll be able to do that. All right, thank you, Juliana. We hope to get more updates from you later in the day.
Thank you.
And back here, we have Temple.
Absolutely, yes, we have Temple here, of course, true. So let's look at what the NASD OTC market looks like yesterday. 0.29% decline here in the market as a result of some profits taken and a bit of bargain hunting in that space as well. Then some sense of cross-dealing that we also noticed right there yesterday. Because if you look at the volume here, 1.33 million units of shares traded on this platform yesterday. 750,000 of these shares were traded across the counter of CSCS. And of course, that's a counter that actually opened at 13 naira 81 kobo, and at the end of the day closed at 13 naira 50 kobo. Famad also recorded some gains yesterday, some 65,000 units of his shares traded out of this 1.3 million units. And then, of course, you had Afriland that did 10,000 and Wamco that also did a couple of transactions there yesterday. All of that accounted for some 21.10 million units, million naira in the market, and took place in 13 deals. Quickly for the fixed income side of the market, where you have, of course, the first time in 2 weeks that we'll see an increase in the yields of the of the bond side of the market, and of course the 2037 paper and these 2028, which represents the short term and the longer end of the curve, was where we saw some activities. We have Ifeoma Onyejekwe, a fixed income trader with UBA, now on the phone to talk to us about what we had yesterday in the market. Ifeoma, what can you tell us basically about what transpired in the market, especially the bond side of the market yesterday, where we saw some kind of increase, the first increase in yield or accretion and yield the first time in 2 weeks?
Hi, Temple. Good morning. Thank you for having me. So yesterday, especially on the bond side, we received some bond coupon payments. So the increase that you saw was some investors selling off their papers that were not yielding much to reinvest in the bond coupons. And yesterday, we also had an OMO auction where 70 billion was offered and sold compared to the 350 billion of OMO bills that matured, and stop rates were maintained on the short and mid-tenor bills at 4.86% and 4.78%, while it decreased on the long tenor bills to 8.88%. And going forward, we expect the penultimate monetary policy committee meeting for the year 2020 to hold on Monday and Tuesday, and no change are expected in policy rates. We also expect yields in the fixed income space, especially in treasury space, to remain at single-digit levels going forward, as the central bank, in keeping true to maintaining a low interest rate environment, retains the upper hand as the principal source of treasury bills, restricting supply of treasury bills and also making use of more aspiration to maintain rates at single-digit levels. However, in the bond space, we also expect demand to pick up steam going into next week as the investors continue to reinvest their bond coupon payments expected in coming weeks.
Ifeoma Ejike, of fixed income dealer with UBA, United Bank for Africa. Thank you for your analysis. I appreciate it on Channel's Business Morning today. Do have yourself a wonderful weekend ahead and stay safe. Chimeze, back to you.
And thank you, Temple, too. And it's on that note we wrap up today's edition of the program and, of course, for the week. Thank you very much for watching. I'm Chimeze Obi Iwagu.